All right, welcome back. We're going to talk about logical points of support and resistance. If you remember from the prior section, we were talking about trend, and there's an old saying in the market that the trend is your friend. And what that simply means is that when the market is trending, we have a majority of traders all thinking the same thing. When the market is trending up, then the majority of traders are thinking bullish. If the market is trending down, then the majority of the traders are thinking bearish. That's it. So by identifying the trend, we are simply identifying where the majority of traders are thinking. And anytime we can identify that, we have higher odds of making money, and that's when we can gauge the likely direction of the marketplace. Now, here's a very important point. Trend really is just a concept. It's an idea. But knowing trend and being able to identify trend is not going to directly make you money. It's similar to a runner who goes out and can tell you what the best shoes are of all the runners in a marathon. It's not going to help him make any more money. Now, if he owned the shoes, maybe it would, but just because he can identify them doesn't necessarily mean that he is going to run any faster. So remember, trend is a concept. It simply helps you to narrow down where price is going. Now, logical points of support and resistance. Now, these are trading tactics. It's a trading tactic that will help you to make money directly. So let's talk about these logical points. These logical points of support and resistance are nothing more than areas where price has stopped. Okay, remember that. Price is stopping. Now, there are several ways that we can find these areas. The first one, just like with the trend, is by simply using our eyes. Now, I'm going to point out a few of these logical points for you, and then we're going to get in a little bit closer and start to look at how some of these logical points can help us to trade. Now, first of all, here is a logical point. You can see that price moved up, but then stopped and started moving down. Now, here is a logical point. You can see price was moving down, it stopped and moved up. Logical point here and here, and also here and here. Here's another one. Okay, you can simply identify these areas where price is moving. In this case, it moves up. Stops at a logical, it stops here. As it moves down, now the logical point is formed. Price moves down, it stops, turns around, now the logical point is formed. Moves up, stops, moves down, now the logical point is formed. Remember, logical points, hopefully by now you can guess this, logical points, it's not something that we can see in the future. Okay, I cannot look at this chart right here and tell you where it's going to go with 100% certainty. But what I can tell you is that as price starts to move, as it starts moving down, I can tell you that now there is a logical point. Why do I say this? Well, I say it because price moved up, and now you can see right here on the very edge of the chart, it moves down. Okay? So a logical point is formed after price stops and reverses. Remember, we're not trying to be the first guy in the pool. I don't want to be the one that tries to turn the market here. I don't have enough money to turn the market. But what I do want to know is if the market is in a downtrend and it starts moving back up and then starts moving back down, that's some very important information. Why? Price is moving down. Traders are thinking bearish. Price starts moving up. Well, now I have to sit back and think, whoa, wait a minute. Has the trend stopped? Is the trend over? Well, here's the code, and this is the code that we have to crack. Once price starts moving again, that's where we get our signal. And then the market is telling us right here, in fact, I'll show you, it happens right here. The market is telling us the trend isn't over, the trend is still down. That's where we have our clue that we have an opportunity to trade. So, once the market forms the logical point, after it starts moving down, we now have an area to trade. So, let's zoom in here and take a look at some of the different ways we can use logical points. Now, here's the thing about these logical points. They really are a very, very simple concept. As long as you have at least one eyeball and you can draw a straight line, you can find and trade logical points. And I'm being very serious. You don't need a lot of complicated tools in order to trade. You want to stick with the simple, tried and true. Now, there are two kinds of logical support. You have horizontal. Now, when I was a Boy Scout, the way they taught us to remember horizontal was the horizon. You know, when you're outside or if you're looking at the ocean, you can see the horizon. It's just a straight line straight across. Well, horizontal simply means a straight line like that. Then we also have angled. Whoops. A-N-G-L-E-D. We have angled logical points of support and resistance. Now, as you can guess, these are simply lines that form different angles, like this, or like this, or even like this. I'll go over these. You know, don't worry about trying to write these down yet. We're going to go over them. So just relax and get the concept here. Horizontal and angled. Now, here's the thing about angled lines, and hopefully you've been able to guess this. Angled lines typically will come in twos. So you'll have two angled lines, a top and a bottom. These angled lines sometimes will form a pattern. And again, we'll go over these. And this is just a little bit of a preview. We have a pattern called a pennant, which is something like this. Okay, you've seen a pennant before. Here's your pole, and then here's the actual pennant. You also have something called a flag. Here's the flag pole, and here is the flag. Very simple. You also have something that looks like a triangle. Now, triangles come in many different shapes, but they will sometimes look like this. And again, just get the concept here. I'm going to go through all of this in just a few minutes. You can also find triangles that look like this, where the top is flat, and of course, where the bottom is flat. Okay, so these are just a few of the angled support and resistance lines that we're going to be looking for. So what is support and what is resistance? Well, if you think about it in this way, you're probably sitting in a chair, unless you're like Donald Rumsfeld, who I guess stands up all day. I don't see how he does it, but if you're like most people, you're probably sitting on a chair. And let me here's my artist rendition of a chair, and here's my artist rendition of somebody sitting at a chair. Well, the chair is supporting you, is it not? So support is when something is sitting down. Okay, so it's coming down and it's being supported. So when price is coming down, look at that. There is support. So support is a logical point where price is being supported from going down. Just like the chair is supporting you from going down to the floor. support is where price is supported from going down. Now let's talk about resistance. Resistance, I'll use a concept. I was a competitive bodybuilder for a while, so here's my artist rendition of some barbells. All right. And my artist rendition of a weightlifter. Now, when we talk about weights, we talk in terms of resistance, right? Resistance training. Well, what does that mean? Well, it means that we have something pushing. Something is trying to stop us from pushing this weight up, right? So if resistance is something that's stopping us from pushing this weight up, then resistance must be in the market when something stops price from going up. There you have it. So, support is when price is moving down and it stops, and then it goes up. Resistance is when price is going up, it stops and starts going down. Now here's something very important for you to remember about support and resistance. We're looking at a daily bar. Support and resistance will show up on every time frame, on every chart, for every price. It's always there. You will always find support and resistance. Now it'll come at different areas, but you will always see it on the chart. You can see here, there's support, resistance, support, resistance. Here's some resistance here and here. Support, support, support. Now, as we look at support and resistance, here's an important thing to remember. Once a support area has been broken, and I'm drawing, here's some horizontal support, and it's horizontal support because price stopped here. Once support is broken, it becomes resistance. And I'm going to go over the very simple reason why. If you think about it, as price is moving down and it stops here, what's going on? Well, thousands or tens of thousands or hundreds of thousands of traders are saying that there's no way that the British pound is worth less than 1.8640. So if on this day, that's what we're looking at is a day, if on this day they're saying that, then if price goes underneath that, what does that mean? They've changed their minds. And you can see that once price broke through, you can tell traders tried to push it back and say, well, hey, wait a minute. Back here you guys said that price was worth more than 86.40. Are you sure? And then the traders will say, yes, we're sure. All right? Very, very simple process. That's exactly how the markets work. The traders all say, I shouldn't say all, the majority of traders say over here, there is no way that price is worth less than 1.8640. We can see right over here that price goes lower than 1.8640. So at one point we have support.